Hello, welcome to Harvest Asset Management's third monthly market review. Today, we will focus on the economic and financial news of the CEMAC sub-region for the first quarter of 2023. Facing the rising inflationary pressures that led to a monetary tightening by central banks and the recent banking crisis, the IMF during its meeting of spring with the World Bank in April 2023 revised its forecast for economic growth. Globally, the world growth forecast for 2023 has been revised upwards by 10 basis points to 2.9% from 2.8% in its January forecast, driven mainly by the Chinese growth of 5.2% and the Indian growth of 5.9%. In sub-Saharan Africa, economic growth forecasts have been revised downward by 20 basis points to 3.6% from 3.8% in January, according to IMF. In CEMAC, at the very first Monetary Policy Committee, the MPC, held on the 29th of March, the central bank revised its economic growth forecast downwards by 30 basis points, thus a projection from 2.7% to 3% projected during the MPC of last December. As concerns inflation, the central bank has revised upwards its forecast by 160 basis points, thus a rate of 6.4% in 2023 against 4.8% projected during the MPC of December 2022. This was confirmed by the International Monetary Fund in its latest economic outlook in April. According to IMF projections, we can see that after having reached a significantly high level, driven particularly by crude oil importers like Cameroon and Central African Republic in 2022, inflation in the CEMAC zone will decrease in 2023. Unlike Chad, whose inflation rate will be below the critical threshold set in the multilateral convergence criteria of 3%, all CEMAC countries will have an inflation rate above the threshold. According to Economic Growth Outlook, we can see an improvement in the growth outlook for CEMAC. On the other hand, the IMF predicts a recession for Equatorial Guinea, and we understand that this is correlated with a weak diversification of the economy. Indeed, unlike the other CEMAC countries, Equatorial Guinea's GDP growth will be drawn back by oil GDP. In the public securities sector of the CEMAC money market, after the month of January characterized by few issuances by the CEMAC states, February saw a considerable increase in the volume of public loans, which stood at 5,655.14 billion francs CFA compared to 5,314.7 billion francs CFA in January 2023. This increase led to a significant 40 basis point rise in the market debt ratio to 8.1% from 7.7% in January. This debt volume is mainly carried by Congo, 31%, followed by Gabon and Cameroon with a share of 23% each. Cameroon's yield curve of March 2023 continues to rise in the short and long term as compared to that of January. This gap is linked, on the other hand, to the current monetary tightening policy applied by the central bank, and on the other hand, to the current economic situation, characterized by the rise in inflationary pressures, which led to an increase in the risk premium demanded by investors on Cameroonian bonds. However, in the medium term, the curve is below that of January. In the case of Gabon, we observe an increase in the long-term yield curve, explained by the current economic situation, which induces an increase in the risk premium of investors vis-à-vis issuances on these maturities by the state. In the short term, however, we see a decline in the cost of mobilizing resources. In contrast to the previous cases, we see a slump of the Congo yield curve for the long term. In the short term, however, we see an increase in resources mobilization costs. The sub-regional financial market continues to rise with a considerable increase in the bond segment by 44.15% in the first quarter of 2023. The increase in the market capitalization of the bond sector is linked to the entries of the bonds EUG 6.25% net 2022-2028 BDSC 6% net 2022-2029, and EOTG 6.5% net 2022-2027 of Gabon, BDSC, and Chad, respectively, in Q1 2023. The market capitalization of the stocks segment decreased by 31.54% due to the exit of the SIAT Gabon shares from the market. At the macroeconomic level, we will revise upwards our inflation projections to 5.5% for the CEMAC sub-region by June 2023, but in a more measured way. We envisage a positive economic growth of 1.6% for Equatorial Guinea for the second quarter of 2023. Thus, we expect the central bank to maintain its current monetary policy at the second Monetary Policy Committee in June. At the market level, with this increase in key policy rates by the central bank, government bonds will continue to play their role as a refuge. However, we will continue to be more attentive to public securities, favoring those with a low and controlled level of risk exposure in order to provide our clients with more reassuring returns. In addition, the equity market has presented us with a good outlook for the first quarter of 2023, and we will continue to be more focused on stocks of companies that can bring us good returns in order to better achieve a good diversification of our portfolio and offer a better investment solution to our clients. For the first quarter of 2023, inflationary pressures are increasing, but we expect a period of disinflation in the coming months. Upward trends in economic growth forecast for CEMAC countries. Upward trend in the volume of government securities, followed by an increase in the yield curves of Cameroon and Gabon, but a decrease in that of Congo. Confirmation of the refuge status of government bonds, with a level of risk considered low and under control. Bonds provide a good return so far, and equities are good. Thus, a good source of diversification for our portfolios. We thank you for your kind attention, and we hope to see you next month for another market review.